Hello and welcome to the Block Explorer. I'm Colin Brightfield.
Hey folks, I'm Cash Upton.
The Block Explorer is here to educate and inspire you about the world of crypto and NFTs.
We'll do deep dives into critical concepts for understanding what's happening and discuss the current events shaping the space.
We're making this podcast for the curious, the free thinkers, and the change makers that propel us forward.
As we embark on our adventures, remember that none of this is financial advice and crypto can be risky.
In this episode, we're going to discuss some top news stories that's happening in the world of cryptocurrency, NFTs, and the blockchain ecosystem as a whole so far in the first couple weeks of January 2022.
Yeah, we had a nice start to January testing everyone's convictions. A little bearish market hit us, huh?
Yeah, the market took a big dump in the beginning of the year so far. A lot of FUD, fear, uncertainty, and doubt around the Fed, and the Fed giving some more hawkish points of view, especially from their notes that came out recently that said that they look like it might be up to 3 interest rate hikes coming up in 2022, maybe even up to 4. Who knows? But it's what's the reason for this, Cash? What do you think?
Yeah, well, it looks like they're trying to curb inflation a bit and, can have a little bit more monetary control.
Yeah, exactly. Inflation is the name of the game, right? We had a 7% inflation in December and people are feeling it, right? Everything's more expensive. If you've gone to the grocery store recently, you might notice that a lot of the things are a little bit more. Some of them are a lot more expensive, certain items. Gas is pretty expensive. So, everything, the energy is expensive, like heating your house during the winter, your energy bill has probably gone up. Consumer price inflation is really hitting people hard. And guess what? It's also an election year, Cash. Midterm elections are coming up in November. And, the economy is always the number one thing. And if the economy's not doing well, if people are feeling like they're not doing well financially, well, whoever's politically in power usually is the one that takes the hit, right?
Right. And the politicians with re-election campaigns want to, at least show the common person that they're doing something to control this, rampant inflation.
We have this idea that, interest rates might be going up, but we also have some quantitative tightening. So the Fed is actually going to shrink their balance sheet. So they're going to be holding less of their treasury notes. And so it's going to create more pressure on the financial system to kind of suck up that liquidity. They're making bonds essentially yields more attractive, and the stock market's going to become more wobbly. We've seen this pretty much going on for the past 6 to 8 months already, and so going in and already in this year, it's been kind of a shaky year. So I think more of this is going to continue. But I think, overall, I'm still bullish crypto, but in the short term, I think we're kind of in for some volatility as we navigate what the Fed's going to do and see what actually shakes out. What are your thoughts?
I agree with those sentiments. Like you said, we saw the markets respond pretty aggressively. Ethereum, for instance, was at around 3,800 in the start of the year and dropped down to 3,000. Bitcoin was up around 46,000 and dropped down to 40K. And then just to throw another one in there, Solana was up around 174 and dropped down to $134. So, we're seeing this response. Again, it does help more people come into the market at a $3,000 price for Ethereum. Didn't think we'd ever see that one again.
It definitely makes it an attractive buying opportunity. So if you are maybe thinking about getting in the market, the thing is, in the short term, there's still a lot of uncertainty. I think that's what's keeping the prices where they're at right now, kind of trading sideways, not really going up or down, because people are kind of like, do I buy now or is it going to go down further? And I think that's what's kind of keeping it where it's at. But I do think we're, once we kind of get out of this holding pattern, and I think we're going to move very quickly to the upside. So right now, we have this kind of tension between, does the Fed raise interest rates and possibly, hamper the stock market or the equities markets in general, but, do something about inflation? Or do they don't really do anything about inflation and try to protect the stock market, right? Or the equity markets. And crypto is an extension of that. It's just further out on the risk curve. So you have I'm glad I'm not in the Fed, because they they're kind of caught in this place, right? Because they're supposed to maintain some kind of steadiness in the markets, and they're also supposed to prevent, rampant inflation. And they only have very little tools to do this. And they're looks like they're going to have to, the inflation has gotten so bad now that they have to do something, right? They can't just keep up with this 7% and not do anything. But at what cost, and what effect is that going to have on the markets as we move into the next 6 to 12 months?
Absolutely. And coming back around to the inflation that we mentioned earlier, the US hit the highest inflation of consumer prices in 40 years with 7% back in December. The United Kingdom, for instance, had a 30-year inflation high of 5.4%. And the Bank of England also announced some interest rate hikes in December, with another possible hike coming in February. And, one of the biggest factors in the UK that you mentioned was those folks expecting to get energy bills that are 2 times as high because of the cost of energy and heating and all that. It really is hitting people hard. And we saw Turkey with a very high inflation rate of 36%. We're very lucky to be insulated here in the United States and have a little bit more tools at our control. But crypto across the world can have some bigger impacts than just with the US citizens for our countries, other countries that are really getting hit even harder with inflation.
Yeah, and that's one of the things that has some people scratching their heads, because they've always thought that crypto was a hedge against inflation. And that's kind of like one of the main things people talk about, when they talk about the narrative of Bitcoin, and there's only 21 million that can ever be mined, and it's a set monetary policy, or the narrative with Ethereum and the merge and how it's going to become deflationary and how we burn ETH. That is a narrative that people play into, but still, I think the overall sentiment is that crypto is a risk-on asset. And when the Fed starts to look like it's going to be more hawkish and not only raise interest rates, but do some quantitative tightening, that's another layer that really sucked some momentum away from the equities markets, and then especially the, tech stocks. I don't know. They took a huge hit so far this year, and obviously crypto's down a bunch too. And you mentioned from the high that it was at, the price that it was at the beginning of the year, but we're not even considering the fact that ETH was at 4,700 on November 27th. So in just under 60 days, it's down almost 40% or more. So yeah, the market has responded to this, but the question is, are we at the bottom? Do we go a little bit lower? So if I was investing right now, maybe I would be putting in, if I had some cash to put in, maybe I'd be buying, a little bit here and there, a little dollar cost average in, because this is a pretty good buying opportunity if you do have some powder on the side. And that's why it's always good, to not be completely all in the markets, because you never know when there's going to be some quick shift and things are going to be on sale, right?
Good non-financial advice right there.
Yeah, this is not financial advice. These are just we're just offering ideas.
So let's take a little shift, something a little bit more fun. We got some music drops coming in. We got the artist Nas going to tokenize and sell 2 songs on the platform Royal.io.
Yeah, we've been talking about Royal.io for a lot of time, and we've been telling a lot of our friends about it. And if you're not familiar, Royal.io is a platform founded by Justin Blau, who is the electronic EDM artist, goes by Blau. And he created this platform that lets you essentially fractionalize or tokenize a song and then sell pieces of that song to your supporters and fans as NFTs. And then those pieces of the song, they have some rights to some of the future revenue of that piece of music.
Yeah, and Nas's drop is actually happening in 19 hours. So it's first of many, I assume, to be happening on this platform. A really cool opportunity. And I'm definitely going to be checking it in tomorrow, see what happens.
Yeah, do you know the names of the songs that he's tokenizing?
Yeah, there's the Ultra Black and Rare are the 2 songs.
Cool. And do you know how many pieces he's tokenizing them into? How many fractions?
760 for the Ultra Black and 1,110 for the Rare.
And is there a set price?
$99 for 0.013 per token. $99 a token.
Okay. And you're getting about like a hundredth of the song, I guess it seems like.
Yeah, just over 1%.
Interesting. Cool. Well, I'm excited to see how that rolls out. I think Nas is the first major hip hop artist to, with really big reach to do this. And I think if this goes well for him, I think a lot of other artists are watching this and seeing how it goes. And if it goes well, then the floodgates are going to open, and we're just going to see so many people following this lead. So best of luck to Nas and his first NFT tokenized song drop.
Yeah, really cool. He's coming at it from an already established name, but what gets us really excited is our up and coming artist friends, the folks who aren't represented by a label and who can, really have a life-changing moment if they were to, take advantage of this and be able to get their fans in early and be able to have more control over the rights of their song and not be beholden by big labels.
Yeah, Royal.io is an example of what Web3 can do by aligning incentives and a community together so that it's a win-win situation for everyone. So by Nas selling his tokenized music, he's letting his fans become co-creators with him, co-investors in his art, in his craft. And so now they're incentivized to go and make those songs successful and share those songs with all their friends and get those songs put on the radio or on, put them on the jukebox when they go somewhere or whatever it is, right? They're going to share those songs. They're going to use those songs. And if those songs do well, they see some of that upside in revenue that gets paid out to them. So this is a really cool model. And I think you're right. It's great that Nas is doing this, but he's already financially, successful, and he's a, great artist. But I think, what's really cool is what you said is how it unlocks this possibility for up and coming artists, and they can use this as a way to get some funding. Essentially, maybe they don't have the resources to get into a proper recording studio or something like that, but they have a couple songs that they've written they have some super fans, right? And they can sell pieces of these songs and raise, $50,000 or whatever it is, $100,000. It doesn't even have to be that much, right? They can raise some money enough to get a session, a recording session, and record some quality music, and then use that. They can use this as a stepping stone, right? Maybe, and it's not to say that like you never need labels and stuff, but this is another tool that artists can now have, right? It unlocks more possibilities. And that's what Web3 is. It's like some people say like, oh, like Web3 is going to replace everything. And in some ways it will replace some things over time. But I think what a lot of people don't realize is that it's like unlocking another set of tools. Maybe you won't really understand how to use those tools yet, just like when the internet was first started. But those tools will get better and the applications will become more apparent as our culture adapts to this new world. And another thing that we have to remember is that the world is a different place now because of the pandemic, and our priorities are different. And that's what's, this whole interest in the metaverse and everything has all been accelerated because we've spent so much time online now.
Yep.
Anyway, that was a little bit of a tangent from Nas, but let's get back to the news here. We have some funny business that happened on Polygon. This was a little while ago, earlier in this year, but we'll touch on it. There was a game called Sunflower Game where you pretty much farm sunflowers, and it was on the Polygon blockchain, and every like game action was often a transaction on the blockchain. So it congested the network so much, and it caused Polygon's fees, which are usually like less than a cent or definitely always under 5 cents, but often like sub cent transactions. 0.0001 Matic, which is the token that you use on the Polygon network. It caused the fees to go up to like 50 cents or $1 even sometimes for a transaction on Polygon, which doesn't seem like a lot when you look at like Ethereum gas, right?
Right. Yeah. Pretty minimal.
You're like,
still.
What? Oh, you're complaining about 50 cents gas on Polygon when it's like $50 for $100 on Ethereum. But that was a lot for Polygon, and it just made a lot of transactions were failing, and it just kind of like messed up the network for a bit. And it just goes to show you that blockchains and stuff are still new. We're still learning all this stuff. It's still unfolding. And people compared it to back in the day when CryptoKitties launched. They were one of the first NFTs to launch on Ethereum. And when they took off, it essentially like broke Ethereum, and it made like transactions take like days to go through. It was like Polygon's CryptoKitty moment, if you will. In some ways, it's a sign of success. If your network breaks because of congestion, it means because people are using it, I guess. But it's not, you don't want your network, and it didn't break. Let's be honest. It just got congested. But yeah, you don't want that to happen. So
yeah, there's about 11% of validators that weren't able to submit blocks because of the surge. And at the end of the day, there's about a 9% drop in the Matic price because of some sell-off. So, some people were seeing it as a red flag and were trying to get out. But again, I mean, Polygon's not going anywhere.
Yeah, they have a vibrant ecosystem, and I think they're positioned well for the future of blockchain. Speaking of future of blockchain, we have a great blockchain event coming up in Denver called ETH Denver. And we found a really cool event at that event called a supper club. And it's an ETH supper club, and you pay in ETH.
Yeah, instead of ETH Denver, they're calling it ETH dinner.
Yeah, ETH dinner. The menu looks actually pretty good too. It's really cool to see this kind of stuff pop up.
Yeah, nice that you can go have dinner and pay in ETH. So we'll have to check it out while we're there.
Awesome. We had something that wasn't so pleasant happen in crypto land. We had a big scam happen with Kim Kardashian and Floyd Mayweather. They're being sued over an alleged pump and dump scam over what was an EMAX, which was an Ethereum token.
Yeah. So first of all, what is Ethereum Max? It's an ERC20 token on the Ethereum blockchain. So it's not a fork of Ethereum. It's not a competitor to the Ethereum blockchain. And it is in no way affiliated with the Ethereum that we all know and love. You'll see a lot of projects taking on popular names in their name to give credibility and validate, but nothing to do with Ethereum. And it had some promises that were pretty ethereal of NFT marketplace that never came to be, yields and rewards distributed to all of the dividend holders. But again, no detail on how any of that actually works. So there's a lawsuit alleged against them that they were essentially doing a pump and dump scheme, inflating the price and then selling off at their benefit and hurting their users.
Yeah, that's a bummer because, you'd like to think that, they were actually sincere, but it does seem that it's just another part of the crypto space. Unfortunately, is there are a lot of scammers and a lot of and people that are attracted to. They see the ecosystem, they see the kind of like the wild west parts of it, and they see an opportunity to take advantage of people. So that's why you always need to be careful and research. And yeah, I mean, chances are if Kim Kardashian's like shilling something about crypto, chances are like don't buy that.
No, don't take financial advice from Kim Kardashian. I'm sorry.
I'm sorry. It sucks, and I hope whoever lost their money, gets it recovered.
There was a lot that went in it. It started out around 4.2 million market supply before the shilling, and then went up to $112 million, and then within just 3 weeks to a month back down.
Wow. So, yeah, that is your classic pump and dump. So. I'll be following this case, and it'd be really interesting if it does actually go to trial and everything, and if they are held accountable. I wonder what the overall outcome will be.
I'm just interested to know what the defense would be. Are they going to plead ignorance and I was caught up in this as well, I just sold quick enough, right? Like, are they going to do that, or are they going to get caught, maybe with some backdoor texts and emails that show otherwise? Well, and that we'll see.
Yeah, like were they in on it, or were they just happened to be famous and influencers and promoters that the people behind it actually kind of just hired, and maybe they were, who knows? But yeah, be careful who you take your don't buy crypto because a famous celebrity says buy it. Do your own research, do your own diligence, and be smart.
Yeah. Look at the team behind it. Look at the white paper. What's it bringing to the space? Is it valid?
All right. So bringing some more things to the space, Apple is coming out with a new headset, kind of like the Oculus, it seems looks like, but it's called the MR headset. And they're saying it's a mix. That's what the MR stands for, mixed reality, set to launch later this year. And they said it's not really going to be about the metaverse, actually.
Yeah. So that's the whole headline here. Apple does not want to get into the metaverse just yet. When everyone's headlines are metaverse this and metaverse that, we have Apple saying no.
Yeah, well, I think it's very Apple like, they like to think different, Cash, don't you know? So so, everyone's zigging, so they're going to zag. And I think they're kind of holding their cards close to their chest and just kind of like, I think, seeing what everyone else does. And then they'll make their move. And I'm sure they're, yeah, they might say they're not doing metaverse stuff, but I'm without a doubt, I'm sure they have some stuff behind the scenes that they're researching and that they're working on. I just do think they're being kind of coy here and waiting and seeing. They don't need to rush because they are Apple, and whatever, if they do come out with some kind of metaverse product or whatever, they're going to have everyone has their iPhones and stuff already it's going to be very easy for them to capture, that market. No one has a Facebook phone. So, Facebook has to work a little harder because they don't own the hardware that a lot of people use. The headset looks like it's going to come out with 2 displays, more than a dozen cameras for hand tracking, and it's going to cost about $3,000. So don't drop it.
Maybe that's why they're recognizing not many people would come into the space at that price just yet. But yeah, I mean, there's already apps where you have like a little cardboard VR headset case that you slip your phone in, and any smartphone can be a VR headset already, like you said. So we will see more and more of these phones come into the space.
More phones coming into the space. And we also have more hearings coming into the crypto space. It seems like every week now there's something happening in DC with crypto or blockchain. And this week is more of the same. So we have a climate change energy hearing happening with the crypto and blockchain industry on Thursday, January 20th. And that's tomorrow at the time of recording. There's a lot of environmental concerns around crypto, as you know, Cash. We've talked about this narrative a lot on our show. And one of the things that we like to do on this show is educate people about the truth of crypto and help them understand that, yes, there is a large energy use for Bitcoin mining, which is a proof of work system. But a lot of cryptocurrencies use a different system. It's called proof of stake. And that uses 99% less energy on average. So a lot of cryptocurrencies will be using that in the future or are shifting to that, like Ethereum will be shifting to that this year with the merge. The University of Cambridge, they did a Bitcoin electricity consumption index that estimates the Bitcoin network currently uses about 15.7 gigawatts, or about 12 time traveling DeLoreans, or 1 gigawatt equals 1 billion watts.
1.17 gigawatts.
Yeah, exactly.
Marty!
Thanks, Doc.
Yeah, no,
the flux capacitor. I wonder what he would say about Bitcoin. He's like, okay, we could mine some Bitcoin with some DeLoreans probably.
Right.
And so for comparison, like a laptop runs using your laptop is like 65 watts. So,
but yeah, we are really excited for the merge and the proof of stake coming to Ethereum, because as of right now, the 2021 global CO2 emissions for Ethereum and Bitcoin were equivalent to 15.5 million gasoline-powered cars on the road every year. So we definitely see this as a problem, and want to let people know that there are solutions to reduce that quite significantly.
Yeah. So this is a really important issue for us, like you said, because that's nothing to scoff at, right? That is a lot of CO2 being put into the atmosphere. What's important to remember is that a lot of these cryptocurrencies, like I said, are going to be shifting their tech to a different style. But also, to bring up to another point, is the fact that a lot of blockchain companies are doing really good things for the climate, like we talked about on our episode 2 episodes ago with Dave Forston about refi, which is regenerative finance. And they're using blockchain to actually sequester carbon and to create incentives for people to build systems into their land that sequester carbon, and they can actually get tokens for this that they can use in the Web3 ecosystem. So there's another side to this point, and I hope some of that makes it into the chat tomorrow on Capitol Hill, but we'll see what happens. Some of the witnesses that will be there is Steve Wright. He's the former general manager with the Chelan County Public Utility District in Washington State, which used to be a really big headquarters for a lot of crypto mining firms. And they actually stopped reviewing applications for new miners due to concerns about how much energy they were using and the potential for them to catch fire or harm the local community. So he's definitely not going to be on the crypto side of things, I don't think. But we also have Brian Brooks, the former acting comptroller who currently helms the crypto mining firm Bitfury, Micro Data Center chief John Bilazare, and Jordan Ramis, PC shareholder and one-time government official Gregory Zerzan. And also we have one more witness will be Cornell professor R.E. Jules. So we'll see how it plays out. But I think overall, this is, even if it's doesn't go that great, I think it's a sign that we're moving in the right direction, that, crypto continues to hold space, gets space and gets airtime in Congress.
Yeah. We'll cover more of it. And, just one thing to keep in mind, though, is when China banned all crypto mining, that did kick a lot of miners out of China, where it was predominantly coal as the energy source. So we are seeing cleaner mining here in the States, but still not carbon neutral. So we'll have another update after the House committee hearing on tomorrow, Thursday.
Excellent. Well, what's going on with SoFi, Cash? We have SoFi Stadium that's around the corner here in Los Angeles, and that's where they're having the Super Bowl. But SoFi is also doing some other cool stuff.
Yeah, so they got approval to launch a bank, but it can't do anything crypto related. Tell me.
Yeah,
more.
It's kind of like, hey. So yeah, SoFi is a fintech. You might be familiar with them. They always have those commercials on TV, but they are a student loan and financial service provider. They help consolidate your debt and do things like that. They actually bought Golden Pacific Bank, and through buying that bank, they essentially got the rights to have a full bank charter in the United States. But they were prohibited in this deal from actually offering crypto assets. So it kind of was like, oh, that kind of sucks, because it seems like, I think it's another point that, we just see, I think, how the government sees this happening and is like, okay, well, you can make a bank, but no crypto. And you kind of wonder where this comes from. But I think from reading some of the articles that there's a provision that allows different instruments to be created that could actually still allow them to have crypto assets.
Yeah, it sounds like they're going to have to do some disclosures and do a few different things on their balance sheet to maybe allow that to happen. But banks are technically allowed to hold crypto. There's just certain regulations, like you said.
Yeah, so I think they might have to do some little financial karate and some bending and wiggling to get around some of these things. But it looks like the consensus is down the line they actually should be able to offer crypto products in the future if they so choose. So it shouldn't hamper them in the long term. It should be kind of more of a short term thing. So bullish, ultimately bullish.
So let's finish it out with something a little more fun. Everyone's buying NFTs, and there's a new way to buy multiple NFTs.
Well, yeah, I mean, when you really find a project you like, Cash, and you got to ape in, you don't want to do a bunch of transactions, right? And pay all that gas if if you don't have to.
You can't buy just one NFT if you like the project, because you're going to want to keep one always, right?
Yeah, you always need to buy at least two, because you got to hodl one. And then once it moons, you can sell that one or trade it or something. So there's this new product that I found out about called Genie.xyz, and it's an NFT market aggregator. So you can go shopping. You can look at all these NFTs across a bunch of different platforms and marketplaces. You can select the ones that you want to buy. And then in one transaction, you can buy all of them. So it cuts down on some of your gas fees. And it's just kind of cool it's kind of like going to the NFT supermarket, or you just fill your cart and check out one time, rather than, if you've gotten into NFTs before, you'll notice, if you do see a collection that has a bunch of NFTs that you want to buy, you have to do an individual transaction for each one. One, it takes a while because sometimes those transactions don't process that quickly. Some can take like a minute or two, or even up to like 10 minutes sometimes. And two, it's expensive. So it's a cool little neat product.
Yeah, it looks like it also lets you list your NFTs across multiple marketplaces. Speaking of NFT markets, how's your looks doing?
Oh, the NFT market looks rare has been doing well. Yeah, that token's been on a tear. It launched just like 9 days ago or something like that, about 2 weeks ago, maybe even less than that. And it's up. I think it started at like $1.58, and it's up over. It punched over $6 earlier today. I'm not sure if it's still up over that, but they have some really good tokenomics actually built into it. They have good staking rewards. If you essentially we touched on this on one of our other episodes, but essentially part of the trading fees that the platform accrues then get paid out to the token holders if you stake your tokens. So, that's just a much better proposition, for native crypto people than OpenSea, which just takes the 2.5% and then keeps it. But, OpenSea has a great product, right? So this is the difference between, a Web 2.5 company versus a Web 3 company. And speaking of OpenSea, there was actually some big news that happened with OpenSea. They acquired Dharma Labs yesterday. Dharma Labs makes a wallet, a crypto wallet. They've been around in the Ethereum ecosystem for a while. They're actually a pretty cool wallet because they were one of the first ones to integrate a smart contract wallet. So they had like a Uniswap button built into the wallet. You could do DeFi stuff without ever exiting the wallet, which was pretty cool. And now it looks like OpenSea is going to integrate with them. And they actually, OpenSea added there is one of their people from Dharma is going to become the CTO of OpenSea. So it was like a hiring and an acquisition at the same time. So OpenSea making moves. Maybe, they saw what LooksRare is doing. And they're like, okay, LooksRare launched. Now they're buying. OpenSea says, all right, well, we raised $300 million with a $13 billion valuation last week. So let's just go buy a wallet company.
Yeah, getting a little closer to Web3 right there.
Yeah, speaking of, we have one last acquisition that's really huge that we forgot to mention. It's probably one of the biggest news topics right now is Microsoft buying Activision Blizzard, $70 billion acquisition, big metaverse gaming play.
Yeah, big time. All the games people love, Call of Duty, Candy Crush. Said no one ever.
Yeah, no, big. That's a huge move.
Big
and
move.
it's Facebook, doing the whole Meta thing. Microsoft is saying, well, you know what, we want in too. We're going to play too, and I think the response has been pretty positive. A lot of people in the gaming community think that Activision was being a little greedy and kind of money hungry in kind of the way that they were building some of their games and some of their practices and some of their policies. So some people the gamers are a little hopeful now that is under new leadership. Maybe Microsoft will steer them away and make it kinder environment for gamers. But then there's also the whole pushback that gamers have against NFTs being integrated into their games, which is a whole other conversation we can save for another time.
Yeah, right. The US gamers, at least, not the people in the Philippines making a living wage on NFT gaming.
Yeah, exactly. Oh, we have one more thing we should talk about, Cash. What's going on this weekend? What are you excited?
Oh, yeah. Well, sir, I'm excited for our second crypto NFT community meetup at Soho Bar and Restaurant.
Cool. What are we going to be doing there?
We're going to be, first of all, having it be community, bringing more people into the space. We're going to be giving away a free NFT from our local artist friend, Kaya Oktayurun, and also going to be showcasing about 10 of his pieces of works as NFTs for sale. So we're really excited about that. And then talking about NFTs as a whole, kind of what we touched on today. How do you avoid the rug pulls, and how do you avoid just listening to influencers for your crypto NFT advice? How can you actually do the research yourself and feel comfortable about coming into the space?
Yeah, I'm really excited for this because I know a lot of friends that I've heard about NFTs. They've poked around maybe a little bit, but they maybe haven't bought one yet. And they're like, well, how do you find one that's good? Or how do you know like which project is going to do well? And there's actually some really good resources out there. And if you know where to look, and you have some insight into the space, you can actually make some strategic decisions. Of course, it is always a risky thing. That's why we always advocate, buy NFTs and projects that you actually wholeheartedly like, because if it doesn't do well, then at least you have something that you enjoy, and it was worth it in a different kind of way. Maybe not necessarily fully monetarily, but you got some joy out of it. So that is happening this Saturday, January 22nd, 4 to 7 p.m. at Soho Music Club in Santa Barbara, California. You can RSVP for this event at reliquarydao.com. You spell reliquary RELIQUARY, and then it's DAO.com. And it's a free event. It's all ages. Everyone's welcome. We're just doing this as a way to continue building our NFT community here in our local backyard of Santa Barbara.
Hope to see you there.
I really hope to see you there. I know I'll see you there, Cash.
Yes, sir.
All right. Now we're going to wrap it up here for today. We hope that you enjoyed this episode. If you did, please leave us a review.
We'd like to give a big thank you to our friend Matthew Patrick Donner, who's responsible for the Block Explorer production, including our music, mixing, and editing.
Thank you for exploring the world of blockchain with us. Crypto is changing the world. We're here to ensure that you're ready.
Please subscribe to our podcast and share this with your friends and family.
We look forward to sharing our next episode with you.
Cheers.
Cheers.